All right, joining me is Anna Wroblewska, Chief Business Officer at Dinari, who's a leading provider of tokenized U.S. public securities. And they actually caught my attention a few weeks ago when they announced a collaboration with S&P Global. So S&P Global, they have the world's largest index provider in S&P Dow Jones indices. And Dinari collaborated with them to design the S&P Digital Markets 50 index. They're also creating a token that tracks this index, available via dShares, which we will certainly talk about dShares in a moment. But Anna, it is a pleasure. Welcome to the podcast.
Yeah, thanks so much for having me. It's great to be here.
All right, so we are going to cover a lot of topics, but let's just jump right in on this collaboration with S&P Global. So, as I just noted, Dinari helped design the S&P Digital Markets 50 index, and then there will also be a token that tracks this index, right? So, just tell us more about that collaboration.
Yeah, we're very excited about this. I think there's a couple things that are particularly cool about this index. So, the idea for the index is to provide broad, diversified coverage to the digital asset space, the crypto sector. And what's really unique here is that the index is what's called a multi-asset index. So it incorporates both crypto tokens, kind of your traditional, token investments, as well as public equities with exposure or business in the space. And this is, when you think about what does tokenization unlock, it's the ability to kind of deploy this sort of indexing strategy in a really easy way. So we're very excited to bring it to market. We think it's a really big innovation in the indexing space, and then also just in the investment side of things.
Yeah, I thought the construction here was interesting. So I show there's 35 companies that are involved in things like digital asset operations, blockchain applications, so on and so forth, and then 15 crypto assets that are selected from the S&P Cryptocurrency Broad Digital Market Index. So that's an interesting, unique mix there. I'm curious, what does it say to you that here we have the world's largest index provider creating an index like this around digital assets? Like, you've been involved in the space for several years. Give us some context on what this means.
Yeah, look, I think we all, everyone who's worked in the space, maybe not everyone, but a lot of us who've worked in the space for a while, you always get excited when a large institution is looking at what you're doing and saying, okay, like this is what we need to be looking at next. I think obviously, S&P is a forward-thinking company. They've been involved in the digital asset space for a while. And this index in particular I think, was kind of very cool brainchild of our CEO Gabe and S&P COO Cameron Drinkwater. And look, it's of course it's a great thing to see a company of that size looking at this and saying, this is a technology we want to be involved in. This is an interesting thing that we can start to do now. And it's I think it kind of tells you, we're doing something right here. And
Yeah,
especially on the tokenization side, I think it starts to unlock a lot of really interesting use cases, and I think the team over there really sees that.
well, I've said often I'm extremely bullish just on digital asset indexes in general, because if I look from the TradFi side, I think that obviously crypto assets, this is an emerging category, and typically traditional finance investors, when you have an emerging category, I think they're going to prefer to take an index-based approach to that. It's going to be very difficult for them to go in and try to pick the winners and the losers. And so I just think that we're very early on this. I think certainly, and we'll talk about how you've tokenized this or how you're going to tokenize this, but certainly on the TradFi side, like in the ETF space, I think we're going to see just a wave of index-based crypto ETFs come to market, and probably actively managed crypto ETFs as well. On the note of tokenization, let's talk more about Dinari itself. So I mentioned the dShares earlier. For people unfamiliar, just explain what Dinari does.
Yeah, so we are a tokenization platform focused on U.S. Stocks and ETFs, so public stocks and ETFs. Um, I always kind of, okay, the next question is often, especially if I'm, talking to someone from traditional finance where I came out of as well, is okay, but what does that even mean? Like, what is tokenization? And The kind of the basic answer to that is tokenization is taking a non-blockchain native asset and creating a blockchain-based representation of that. So that's like the very simple generic answer, but of course that can mean a lot of different things, right? So the two things that I think are important, both in trying to understand what tokenization is all about and in understanding more about how our platform works, is number one, what does that token actually mean? So, what is it that you're buying? In the case of Dinari, we are very focused on kind of providing the full rights and benefits of ownership of whatever that backing security was to the token holder. And then, so things like cash dividends, the ability to sell at national best bid offer and BBO price at any time. And then two, what is the legal framework around that? So our platform is designed to be compatible with and comply with existing financial infrastructure. And we think that's important for a whole host of reasons around both investor protections and things like liquidity and market depth.
And I want to get into more detail just on that, the tokenization, but you also offer a US dollar plus a native
Correct.
stable coin, correct?
Yes.
And how does
So
that
you
factor into
can,
the ecosystem? Go ahead.
yeah, that's a great question. It's, the USD Plus you can think of as largely similar to like a money market fund. If you have some kind of uninvested dollars or cash or stablecoin sitting around, and you want to generate some yield on that in a way that is sort of easy to get in and out of, right? So it's not necessarily a long-term investment. You want to be able to deploy that capital into something else. You can think of it that way. It's essentially our take on a money market.
Okay, so right now, dShares, going back to the tokens, those are only available to non US investors. Is that correct?
That's correct.
And just talk about that process. So if I'm a non US investor and I want to access dShares, how do I go about doing so?
Yeah, so we work with distribution partners around the world. We're live in about 85 jurisdictions today, and we do that. When I said compatibility and compliance earlier, this is one of the reasons why we do that, because all of these different jurisdictions have different rules around securities and around tokenized securities. But so what you would normally do is you would go to one of our distribution partners, and those range really from neobanks, brokerage applications, fintech applications, crypto native exchanges, and other providers, and you would access them that way. And it's very simple, and sort of we're very focused on like make it simple, make it easy, make it a good user experience, and still give people again the benefits of owning the security that they are buying.
And I believe right now the offering is something like over 150 tokenized stocks and ETFs. Is that right?
Correct. Yes. So our platform is highly scalable. We have those 150 because those were kind of I think we're actually up to 200 at this point, but it's sort of based on demand and what people want to be investing in. We will scale to offer all of NYSE Nasdaq on our platform, and that's we can get into this if there's interest, but that's just a function of how the technology works. It's designed to scale to accommodate kind of the full range of public market securities.
Well, let's get into a little bit of detail here. I guess
Yeah.
first, if I'm a buyer of D share tokens, how can I have confidence that those tokens are fully backed by the underlying securities? Like, talk a little bit about the back end plumbing here.
Yeah. So without getting into like an obscene level of detail, we do think that that's very important, and the framework that we've chosen to issue these tokens under uh, preserves that right. So you can kind of you can be assured that they're there for various legal kind of protections. In terms of what is kind of what you can go check out, we have a transparency page on our website that kind of direct feeds data about what's been issued, and that the backing is there. We haven't done this yet, but we will share kind of audited financials on that too, particularly our more traditional financial partners and distribution partners. do like to see kind of third party audits. So that's available as well.
What about liquidity? Like, how liquid are these tokens, and how much slippage might there be in trade execution? And maybe as part of that, you can just talk about the importance of liquidity and tokenization overall, because I think that's a big topic.
Yeah, this is actually just on a personal note. This is one of my favorite topics. This is, I think, it's one of the most important things that needs to be understood and focused on if tokenization is going to be, really fulfill its potential in the future. So, our platform, again, when I say our platform is designed for compatibility and compliance with existing infrastructure, part of that is that we have direct connectivity to the traditional markets. And so essentially, we were talking about like if you were to place try to buy a D share right earlier. So say you want to buy a share of Tesla, that transaction gets routed to us. We actually go out to the traditional market and place that transaction, place that buy order, and then mint the token back to you, based on that backing purchase. So that there's this kind of twin, it's a twin of the security. The token is minted at the time of purchase, and it represents that security that you bought. Um, that methodology, what it does is it creates this ability to interact directly with the traditional market, which means that you have a depth of liquidity of the traditional market, and you have this ability to get market prices. So, I mentioned NBBO earlier. We pass that on to all of the end users of our partners. You don't have to sit there and compare like, is this price kind of approximating the market price or not? You just know that that's what you're going to get. So there's a user benefit there, of course. And, obviously, where this evolves from here is a kind of interesting, longer discussion. But I think the liquidity piece can't be overlooked because if you have, massive price slippage, if you have massive price impact, you're simply not, that's not a market that at scale people are kind of going to be able to interact with. You need to have this process of bringing that liquidity on chain over time, and that's something that we've focused a lot on.
So let me ask you a very basic question here. If you're buying the underlying security and then minting the token, obviously we know traditional financial markets, they're not open 24/7
Yeah.
yet. I think we're
Yeah.
quickly heading down that path.
Yeah.
So how does that work if somebody wants to buy a token, say, on a Saturday night?
Yeah. So right now we support 24/5 trading, like most venues on the traditional side. If you do place a trade on a Saturday, it will kind of wait until things open on Sunday night. The dark pools start opening up on Sunday night to execute. So there is a little bit of waiting involved. I think we are definitely moving in a 24/7 direction, and we will have more news to share about that in the coming months here because it is a goal. I mean, obviously, especially for those who are used to trading on chain, we're there's a comfort with, and you kind of, it's sort of like you get used to next day shipping. You get used to having 24/7 market access, and it's definitely a high priority. The important thing though is to do it in the right way, in a way that preserves again the liquidity depth that you kind of need, especially for these types of securities that are, there's a lot of demand for them, and there's a lot of traditional market depth there, and that preserves kind of orderly market pricing and solid trade execution for the user.
So just to put sort of a period on this entire point, so if you're currently offering 24/5 trading, and let's say there's roughly 200 tokenized stocks and ETFs, I'm assuming for all of those, clearly you're able to source that underlying liquidity, right? These are global equities or ETFs where there's a market around the clock, so you can always source the underlying and then mint the token.
Again, yeah, again, that's exactly right. And because we are going out to the traditional markets on this 24/5 basis, uh, the traditional market liquidity is the liquidity that you're getting for the tokenized security. You don't have this distinction that you have to manage or deal with.
Exactly. I always talk about on the ETF side that if you want to know how liquid an ETF is, you have to look to the underlying holdings. That's going to tell you
Yeah,
the liquidity at a high level. You alluded to this earlier, but I'd love to have you just elaborate on the dShares. How exactly are dividends handled? And then I'm also curious about voting rights. How are those
yeah.
handled on underlying shares?
So we pass through cash dividends. I think we might be unique for that, and I think this is, if you just focus on trading, maybe you're not as focused on things like dividends. But most people who are investing, just around the world, you invest for kind of all the benefits of that, right? So we do pass through cash dividends, and we do think that's an important thing to offer to users. With respect to voting rights, internationally, we can't pass through voting rights yet. That is obviously, something that, again, you would kind of like to be able to do. Currently there's not a great framework to do that. So this is sort of a longer term thing we're working on.
So I have to ask you, I have a number of what I'll call crypto curious TradFi listeners of this podcast. And
Yeah.
I talk about tokenization quite frequently. And I'll tell you, Anna, a pushback that I often hear is that, like, does tokenization really make things that much better? And I think the thought is that vehicles such as ETFs, they're already extremely efficient, they're cost effective, and so tokenization doesn't significantly, improve on them. How would you respond to that? You've already touched on some of the benefits of tokenization, but how would you respond to that line of thinking?
Yeah, no, and I get it. ETFs work really well. I think if you were to ask a mutual fund manager who was managing an index fund, 15, 20 years ago, if ETFs are needed, they might have also said no. Um,
You're
but
speaking my language there.
um, I think we are really just at the beginning of what is possible with tokenization. And one of the reasons why we were really excited about this index is because it does start to unlock things that aren't really that easy. So, ETF investing, you want to invest in, whatever these broad kind of market categories of equities and whatnot is really easy right now. Multi-asset index investing is not easy on traditional rails. It's costly, it's time consuming, it requires a lot of um, active effort on the part of the manager. Uh, One of the reasons why we're so excited about this product is because it starts to show you how much easier that is on blockchain based rails. So, with one token, with one kind of simple product, you have access to multiple assets that are kind of automatically rebalancing. All the things that we love about some of these traditional types of securities, but even easier and across assets. You can start to get into multi-asset markets where instead of, for example, settling into always settling to fiat like you do now, you can just cross directly into another asset. So I think that's kind of another next stage of this. In the short run, of course, I'm talking about things that evolve over time, right? In the short run, you do have benefits. I think, sitting in the U.S., it is hard to see how difficult it can be to access these types of securities around the world. There obviously is a lot of demand for U.S. capital markets. It is not always easy to access them, depending on where you're sitting, how much money you're sitting on, how familiar you are with sort of traditional ways of accessing the market. But then you also have in the short term, I think, some interesting utility that you can start to do once you're on chain, right? So, yes, you can create a margin account on the traditional side, but imagine being able to do that, pretty seamlessly, instantaneously, and on tiny denominations of like $10. I mean, no one's going to give you margin on $10 today, but like you can easily do that on once you're using blockchain based rails. So, you can start to kind of get more out of your portfolio as well in a way that I think is actually really interesting in the short term. But I cannot underemphasize, or I cannot overemphasize how exciting I think the long term benefits here are. For these, multi-asset strategies, there's tax strategies that you start building into that, and these, cross-asset marketplaces.
What do you think needs to happen here in the US to further open up access to tokenized security? So we already mentioned dShares, those are only available to non US investors. I think people are seeing a lot of headlines about different platforms in the US wanting to pursue tokenized equities. I realize we could talk about the regulatory environment for several hours. That's clearly a factor, but just like high level, what do you think needs to happen in order to further open up access to tokenized securities?
Yeah, I think stay tuned. Stay tuned. It would be my high level comment on that front. I think we've been working on this for a long time. Dinari's been around working on this problem since 21, and obviously, there are regulatory factors at play, but it was kind of our intention from day one to build something that is compliant with and plays nicely with existing securities legislation, and plays nice with the SEC. And I think that that's given us a lot of time to build in the right way, and to build something that can really really work for the U.S. market. So I would say please follow along and stay tuned for what comes next out of Denari.
Okay, you have me highly intrigued now. I will certainly be following. Let me just ask you this then, and maybe this is a cliche question, but from your perspective, how much has the shifting regulatory environment that we've seen over, just say, roughly the past year played into how Denari is thinking about this moving forward, or how helpful has that been?
Yeah, look, it's always helpful when you have curiosity and enthusiasm and engagement, right, from regulators, and I think we've seen a lot of that. I think um, you have a lot of leadership at the SEC that those of us who've been in the space for a while, Crypto Mom is a really important player and always has been kind of an important champion of the industry at the SEC. I'm referring to Hester Peirce, of course. Um, and look, like I said, it's always great when you have a high level of engagement and interest. I think what's important is that the rules that govern markets have been around for a long time. Even like Reg NMS has been around for a long time. Exchange rules have been around for nearly a century. These things have. It's important to understand where the SEC is coming from, where regulators are coming from, and again, like having spent a lot of time, our team has spent a lot of time, again, trying to understand those rules, trying to build around those rules and comply with those rules. I think that hasn't changed. Our kind of approach to how we build Denari and how we deploy Denari hasn't changed. But the certainly the ability to engage and have that curiosity and enthusiasm is wonderful.
Okay, so clearly Denari has some very interesting initiatives in the hopper. And so, with that in mind, let me ask you this. How do you think about the competitive landscape for tokenized securities? Because it does seem like there's a bit of a land rush going on in this space right now, right? You have a lot of players. I would say some pretty big players who are getting involved or seeking to offer tokenized securities. So, how do you think about that from Denari's perspective?
Yeah, it's really exciting. It's exciting to be in a market that people are entering and again engaged with and excited about. I think it's intellectually very interesting because there are a lot of different models of tokenization. I kind of alluded to this earlier, but there are different approaches to how to tokenize securities, how to bring markets on chain. What does tokenization even mean? What does it give to the end user? And it's interesting to see the different models that are growing out of that, and what the use cases for some of those models might be. We've really focused on a few important things. So one is scalability. There's tens to hundreds of trillions of dollars in liquidity in traditional markets. Can our platform scale to accommodate that? And that's been a major focus on how we've taken kind of every step of Denari's growth is building a platform that can accommodate that scale of liquidity that you see on the traditional side. And two, I said this before, but we're focused very strongly on compatibility with and compliance with traditional market infrastructure. So, you know, we need to be able to interoperate with the traditional market. It's a core feature of our platform. It's a core feature of how how we've approached kind of every aspect of building this business of Dinari. Is there is a traditional market, to some of your friends' points, it functions very well. How can we contribute to that and beneficially add to that, um, in a way that is compliant, that protects investors, and that can grow to the potential of what this tokenization technology can do.
What about the underlying blockchains that tokenized securities ride on and in the competition there? Like, I'm curious how you see that playing out as it pertains to tokenized securities. I've had people say it's winner take all. I've had some people say it's a winner take most. Obviously, you have a lot of competing chains out there. How do you think about that?
Yeah, we don't really, our view is that we don't really want to take a positional or a directional bet on what network is going to win or what type of network is going to win. I think we've already seen this play out a little bit. Maybe it's going to mature over the next several years. We've already seen this play out in the crypto space, that like certain things are good, certain venues are good for certain things, right? And that exists in traditional finance too. I mean, there are certain types of securities that trade in certain ways, right? Because of the strategy that you need to use to trade them, or the illiquidity or liquidity of those assets. And I think you'll see probably maybe something similar on the network side, the blockchain network side, where different networks are kind of positioned to do different types of things. Our goal from Dinari's perspective is how can we interoperate with all of those networks and make sure that we don't see liquidity fragmentation across them. So one of the things that I think regulation and regulators are really focused on is preventing liquidity fragmentation, right? Like good markets have very deep liquidity that's all pooled together, um, kind of even conceptually in one place. And so what we're trying to do is make sure that that continues to exist, on the Web3 side, where you don't get these liquidity silos across different networks, but how can you build in a way that can accommodate what all these different networks might be good at, or the types of customers that they're reaching and like truly engaging with, while still preserving liquidity across the entire ecosystem. So that's kind of been our take on it and our approach to it.
Does that play into the recent announcement I saw regarding the Dinari financial network, just where you're coordinating across these different chains?
Yeah, exactly. So, the Denari Financial Network, and I think this is, if you want to get into some of the cool long-term benefits of tokenization, is designed to be this coordination layer. So, we have distribution partners on multiple different blockchain networks. We're not going to tell them where they should do their business, right? That's not in our interest, nor is that any of our business. But we do want to help them make sure that their customers are being served in the most effective and efficient way possible. So the Denari Financial Network coordinates across networks to make sure, again, that we prevent this liquidity fragmentation, we preserve best execution, and then we preserve that throughput to the traditional market for liquidity.
The liquidity fragmentation, that's such a great point. I mean, it goes back to what we were saying before. Clearly, it's an area that you're passionate about. Liquidity is everything here. If
Yeah,
liquidity doesn't exist, you're not going to have the user experience that is necessary to obviously attract users. And, liquidity begets liquidity, as you know. So
100%.
it's just such an important point in talking about the tokenization of securities. A few minutes left here. Let's do this. Why don't we have you get out your crystal ball for us and just tell us what the future looks like? So, will everything be tokenized? Is that where we're heading, or is it much more nuanced than that?
That's such a good question. I think about this a lot. I have been wrong about this in the past, so you can't help but wonder. I think so. One of the cool things, and I kind of maybe alluded to this a little bit. I think one of the really cool things about blockchain-based infrastructure is that you can collapse kind of multiple layers of operational backend. And this is like the kind of stuff that most people don't think about with respect to finances. Like you have clearing, you have settlement, you have the exchange layer, you have the custodial layer. You have all these different layers of infrastructure. And what's really fascinating, I think, about blockchain-based infrastructure is that you can start to collapse those all into kind of this single entity um, that is a lot easier to deal with also. So I do think tokenization done in the right way with this foundation, again, of ownership and, kind of regulatory compatibility can start to unlock a lot of benefits across many different types of securities and even other assets. So I don't know if everything gets tokenized. I do think a lot ends up tokenized, especially, I think probably from my perspective, it would be especially things that are fungible. So, like one share of Tesla is indistinct from another, and so that kind of creates it. It's a good environment for that, I think. But we'll see. I certainly think that a lot more ends up on chain, especially if we keep going down this road of multi-asset investment products, think about other sectors where you have, commodities, private debt, public equity, kind of all in one stack. And in markets where it makes sense to have these multi-asset markets where you want to cross from one security or instrument into another. I think blockchain-based infrastructure and tokenization lends itself very well to those types of applications.
Well, Anna, such an interesting conversation. I greatly enjoyed connecting. This was fun. So thank you for
Yeah,
joining
thank
me.
you. I really appreciate it. Thanks so much for having me.
That was Anna Wroblewska, Chief Business Officer at Dinari. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.